Welcome to the Altcoin Podcast, your source for all things altcoins and cryptocurrency. I'm your host, Chad Michael Burry, and today we're diving into the exciting world of decentralized exchanges and perpetuals. Have you heard of DYDX? Well, it's a decentralized exchange that's focused on perpetuals, and they're set to unlock 150 million or about $200 million worth of their native token DYDX on February 2nd. Now, I know some of you may be thinking, wow, this sounds like a potential shorting opportunity, but before you go placing any bets, let's take a look at what some analysts are saying. They're cautioning against taking short positions in the derivative market tied to the cryptocurrency DYDX. Charles Story, head of growth over at Future, a crypto index platform, had this to say: while the upcoming token unlocks will give venture capitalists who invested in the project access to part of their token allocation, the market feels they will more likely hold instead of sell, continuing to show their support for DYDX and signaling their commitment to the community that they are here for the long term. But what exactly are token unlocks, you ask, and why are they important? Well, token unlocks refer to the process of releasing tokens that were blocked under the terms of the project's funding rounds or fundraising efforts. According to CoinGecko, the supply of DYDX will be fully unlocked by September 2026. Now let's talk about decentralized exchanges and perpetuals. Activity in decentralized exchanges like DYDX and GMX offering perpetual futures has picked up pace since the collapse of centralized derivatives giant FTX. Trading volume on DYDX increased from 2.9 billion on January 14th, according to data from Nomics, after reaching lows of 212 million after FTX's unfolding. Perpetuals are futures contracts, but unlike the latter, they don't have an expiry date. This allows traders, both bulls and bears, to hold their long or short positions as long as they like. And DeFi investors see perpetual contracts growing in popularity and feel that the market will favor companies in this space. The shift from centralized to decentralized derivatives exchanges is likely to gather speed this year amid the collapse of some of the centralized exchanges, such as FTX. Decentralized derivatives and perpetual exchanges are another area in DeFi that is poised for growth this year. And as we all know, in the world of crypto, things are constantly changing and evolving. The rise of GMX has been fascinating to watch in the second half of 2022. And since then, several newer derivatives exchanges have launched, including Gains Network and Perpetual Protocol, and will be competing with GMX to take the throne off DYDX. This which is currently the largest decentralized derivatives exchange by far. Miles Dusher, as we all know from Crypto Banter, trader and analyst, he said on Twitter ahead of the DYDX unlocks that it's better to be net long than short, he thinks. Firstly, because shorting is becoming an overcrowded trade. And he said, however, this is a dangerous move in a market where there's a lot of upward momentum. David Sherman, a trader on crypto, or he's from Crypto Finance AG, he said, referring to the widespread shorting of tokens ahead of the unlock. And as always, it's important to remember that teams or projects are not oblivious to the impact large token unlocks can have on the price of their coin. They can't stop investors from selling, but they may choose to release good news around the unlock to increase buying. That's happened in the past. We can see that potentially happening here. So you don't want to be completely offsides there. But anyway, that's the news on DYDX. Trying to keep these under 3 minutes, so we'll cut off there. But you guys have a great day, and we'll be back tomorrow with another coin analysis for you.